Welcome to Achieve Wealth through value-add real estate investing. This is the show where the guru hype is banned and you get direct insights from commercial real estate operators. If you're a passive investor, this show can help you better understand investment opportunities. And if you're an active investor, the lessons from each episode can help you to become more effective in your own deals. Now, here's your host, investor and author, James Kandasamy.
Hi, this is James Kandasamy. Thank you for listening to this podcast. I appreciate you. I know I provide a lot of value through this podcast, and I want you to share it with your friends, with your families, and anybody else that you know that kind of benefit from listening to this kind of content. Go and share it through Facebook, through LinkedIn, through Twitter, through Instagram, or any other channels that you want to share it, because sharing is caring. Thank you. Let's go on with the show. Hey, audience and listeners, this is James Kandasamy from Achieve Wealth through Value-add Real Estate Investing podcast. Today, I have Raj Tekchandani from Boston area. Raj is a co-sponsor / KP GP in 650 units across Georgia, Florida, Kansas City, and Texas. Hey, Raj, welcome to the show.
Thanks, James. Thank you for having me.
Good. I'm happy to have you here because I want to talk about technology. You are a technology guy turned into multifamily investor, right?
Absolutely, man. I can speak technology all day long.
Yeah, absolutely. I want to make sure I give you opportunity to explain some things that I missed out. So why not you tell about your story? How did you get started and how did you end up being a multifamily investor?
Sure, I will do that. So, hi guys, I'm been in technology most of my career, like undergrad computer science, then I did a high-tech and MBA in high-tech. So purely technology based and wanted to become like the next, big company founder. I worked startups for a lot of my jobs were mostly startups. But when I realized that I'm sitting on a lot of options and not going anywhere, I said I need to diversify and started looking into real estate investing. That was not until 2012, but that was just a side gig. I still was fully devoted to my job, which is startup, and it was in data analytics space. And we're building a platform to connect all the data in the world together and put meaning into data using something called a data lake. A lot of pharma companies were using our software, financial services, but there was no real estate using it. But anyway, after I finished my 5 years with that company, my stocks options fully vested, I was like, okay, what is my next startup? By this time, I had, started collecting my rents from the little investments I'd done. I had started investing in 2012 in one condo in Orlando, Florida, and gradually went on to buy more because the prices were very attractive and I could see the prices going up. And I said, let me just get in there. So I got in there, fortunately had a good property manager that helped us, take the worries or headache off our head. And the cash flow was beautiful. In about 2016, I said, okay, this need a serious look. And I bought actually a 15-unit multifamily near my house in Boston. And I wanted to do more of that because I'd heard, multifamily, the whole economies of scale, blah, blah, blah. So I said, let's get in multifamily. And, that experience was interesting. To say the least. I had, not too much knowledge about the, underwritings and how to really look at expenses. And that came in as a very expensive learning lesson for me in terms of multifamily, looking at. So from there on, I said, you know what, this is too much work. I can't do this. Found a good property manager. He quit and then found another one. Then he quit. And it's like, this is too much. So I said, no, passive investing is my way to do it. This whole active thing is not my thing. And I'm still working, full time on my job. So I started investing passively with some, investors. First time I looked at a passive deal, I was like, that's too much. There's too many zeros in here. I can't do this. But gradually, as I, understood, I took, learnings and, took all the courses and reading blogs and podcasts. And I got comfortable with investing passively. And then a couple of passive investments. And I was like, this is great. I have my 9 condos. I have my 15-unit, which has now started giving me cash flow. And now he has passive investments. Interestingly, it was almost matching up to my startup salary, right? And I was like, the options are great, but what if the options don't, mature or do much? So I took a bet and I quit after 5 years of, my job to do real estate full time. And that's how I dig more into multifamily. But interestingly, at that point, I had this idea of another startup, which didn't go too much far because I wanted to take these learnings from data analytics into real estate. And now that I'm doing multifamily and doing all this, I'm not seeing too many systems out there. It's still very, laborious jobs. The property management companies do a lot of work. on paper, and even the underwriting was very, painful. So I was like, what if there's an automated software, machine learning data, whatever we have learned in technology to build that? So I, met up with the person at MIT, Jennifer. She had done a PhD in real estate technologies, like artificial intelligence, machine learning for real estate. I was like, wow, bingo, this is the person that I need
to talk to, right?
Yeah. So I sat down with her and she went through her thesis with me. In fact, she was nice enough to explain her thesis that there's too many companies out there that are doing what I'm trying to do.
So what was the thesis about?
The thesis was the use of machine learning and artificial intelligence in real estate.
But is it real estate underwriting or is it real estate analysis or
real estate analysis?
Okay. Is it for investment or is it for
there? So she actually worked for MIT's endowment program that buys real estate.
Oh, okay. So they're basically looking at investing. So basically,
they're looking at investing.
Okay.
So mostly commercial real estate, and that was her. Eventually, she became, from her thesis, she became into that MIT's fund. She was working there at that time. But in her research, she had looked at a lot of technology companies, right? From doing everything from sensitivity analysis to underwriting to all this, figuring out where the locations are, location thesis, property management companies that are looking to do automations based on, the previous year's data. So a lot of machine learning in there. So I said, this is great. And one of the companies that struck me at that time was Inodo, which is what I had been thinking about, sort of how to automate underwriting and how to take all the data that's been sitting in, all these Yardi metrics and all these places that been collecting data. How can we leverage that to say, okay, this is a property that I'm looking at in multifamily. This is the address. And boom, it'll go and, run its algorithms and come back and say, red light, green light, or yellow light, based on all these factors. And Inodo was doing that. Some of that, I talked to the CEO there and I started using the platform. But so I've had some suggestions for them into building other features in the platform. But at that point, I said, I'm more of a user now and then a technologist. I want to use these technologies that are out there. I can, talk about what features they need, like lease analysis. In one of the deals, we went through and sat in the back and looking at 150 leases, right? One by one, what is matching? There's no use of doing that. Those leases should be fed into a system and outcomes, okay, these are the mismatches.
The lease file audit should be automated.
Yeah, automated. This is the tenant profile, and based on this tenant profile and this property and this neighborhood, this, tenant profile will be surviving through any downturns or upturns, right? I mean, that's what you need to know, Anthony, tenant profile. Mm-hmm. But I'm sure somebody will build it in there, and I think Inodo was already thinking about doing that. So anyway, so that, from that, I said, okay, I'm going to stay as a user. I start using these technologies and, but then I got stuck more into the whole underwriting piece and managing the properties, finding the properties. I was like talking to brokers now, talking to this. And that's how I met, a couple of good people that through, a coaching program that I said, okay, it's time to, take the next step, move from passive to active and see how the things are done. I wanted to be closer to the action. So that's how I got into active investments.
Got it. I mean, that's a really lot of things there. So I want to go a bit more detail on that.
Yeah,
so,
I rattle off a lot.
I mean, so right now you're a full-time real estate investor, right?
Full-time real estate investor, yes. Okay. And, always thinking of the next technology idea in the back of my head.
Well, that's the problem with all these tech guys coming into real estate. I also think the same. Let's automate this. Let's create a system on this.
Yeah, but I keep in touch, keep a pulse on that. So I don't know if you know about this organization called CRE Tech, Commercial Real Estate Tech. Mm-hmm. They're out of New York and they are looking to all these things of, who's doing what company is being funded. So I keep in touch with them. I'm a member of them. But just looking at ideas and, someday somebody has come up with a great idea that is
Yeah.
Because we are still a little behind than other industries in terms of use of technology.
Oh, yeah. Real estate is so manual. I mean, there's not many people investing in technology. And it's a bit tricky too, right? Because there's a lot of people component.
And, I was told one day that, what? AI, artificial intelligence, the biggest tool, billions of dollars are being traded in real estate based on what? See, the Excel spreadsheet. That is the best, technology of choice of all these big REITs and fund managers, and they're just doing Excel spreadsheets.
Yeah. I don't know whether real estate is just so hard to automate in terms of location, because even like if you look at a street, one side of the street can be completely different valuation from the other side, right? And how do you tell that to the software? You can't tell that people have different preferences going in.
Well, you can tell that, you can tell that by how many murders were on the left side of the street and how many murders on the right side. That's public data.
Right? Well, if there are murders, right, but not everywhere.
Whatever. I mean, I'm just saying crime rate or school districts, and there's so many factors, right, that you can pinpoint. And now there's so much data being collected on all this, right? You just have to leverage the data. And every time a property gets sold or property gets bought, that data is entered into a system, right? The analysis is into the system, even for, upgrades. People, all the data is being entered. So you should be able to tell that if I put a granite flooring in this, or I put a vinyl flooring in this, or whatever, this is the value in this zip code should fetch me this down the road, right? Mm-hmm. Because that's being tracked.
I think that's what Inodo does, right? Sometimes they do a lot of underwriting. They try to predict what is the rent going to be, right? Yeah. But I'm not sure how big they are. I mean, I know a lot of people, there were some people really excited about it, but some people really didn't like it. I saw it once. I mean, the tool looks good for a techie, right? If you're a techie, it looks like, everything's done for you. But I don't know, for me, I don't feel comfortable. I really like
No. I think there's nothing. So all that said, James, there is no equivalent to having boots on the ground.
Boots on the ground.
This is what I've learned.
For real estate, you have to go and see the property. Yeah. You have to do the comps yourself. And
exactly. So, you do all that. That saves you a lot of time, right? That does save you a lot of time because you can do the comps analysis a little bit. Mm-hmm. But the real analysis is done when you're there and you're looking at the property. Because, I mean, we walked away from a deal that had everything looked good on paper and tools and everything because this one building down the slope, had some structure issues. Uh-huh. That we didn't know. I mean, no technology tool will tell you that, standing on some pillars that are fake.
Correct. You wouldn't know that. I mean, there's no way to know. I mean, as I say, I love all these tools, but I don't know. For me, I don't want to pay so much money for all these tools unless it's giving me an automated thing, but nothing is automated.
I think that's where the progression has to happen. The more tools have to get better and they have to get cheaper for adoption. Mm-hmm. Otherwise, Excel spreadsheets will keep ruling the world.
I mean, one day it will, right? I mean, if you look at it right now, we need a buyer agent, we need a seller agent to do a house transaction. And the reason for that is so much of people touch. A seller need to know that he's getting the best value for his product, right? And only people can see the house and decide whether it's a good house or not, right? It's a bit hard for computer AI to really say that this is a good house for this person, right? It's very maybe one day it will.
It will. I mean, it'll cut short the time, for your needs, maybe.
And I know a lot of startups who are trying to do all this. Right. I mean, and every tech guy who were introduced into real estate in the behind of his head is, I can do a startup, to do even syndication. People are trying to automate right now, right? They're trying to rank the sponsors. They're trying to give stars to sponsors. Everybody's trying to do all this, right? But as I say, it's very hard to give a star ranking to sponsor, right? There's so many other things that's involved, right? I mean, one day probably yes, but we are not there yet, right? With the technology or the information we have. So how do you feel? I mean, you and I are almost the same, right? I mean, we're always in the technology space and suddenly become real estate. Do you think you have wasted all that lifetime in tech space?
No, not wasted. I mean, not wasted. It's again, it's life as it plays out, right? Right now where I am, my biggest strength is, my value for my time. I mean, I control my time, right? By doing what I'm doing. When I was working tech job, and I used to see we had management meetings on Friday afternoon. I used to hate that. I was like, now if you go look at my calendar, you'll never find a Friday afternoon open because I've blocked it.
That's good. Yeah, I mean, sometimes, people who have studied so much, in certain field, I don't think so. I do see some doctors moving from, being a doctor into becoming a real estate investor. At the end of the day, it's all about time, right? Time and how much you enjoy
it's all time and it's what you enjoy, right? I mean, I also realize that a lot of what I do in real estate is marketing. Mm-hmm. And marketing I didn't know that. I love marketing. I mean,
nobody cares in the tech company, right? Because tech company,
so that's actually when I moved, even in my tech job, my last job was in marketing, right? Mm. So I was basically demand generation for this data analytics platform that we're building. So basically, evangelizing technology for people that don't understand it, right? Mm. It's sort of a marketing. So writing blogs, writing white papers, writing all this stuff, simplifying things for them. That's what I had become in my technology job also because. Nobody wants to hear the mumbo jumbo of, data lakes and fabrication and all that stuff. It's like, bring it down. What does it do for me? And now is the same thing, right? Syndication and, IRR, what does it do for me? I mean, so it's understanding marketing is basically attracting the right people and, getting rid of people that you don't want in your system.
Got it.
So, that's why even in capital raise, even the deals that we do, it's very important to figure out who your end customer is, which in our case is investors, right? And it took me a little while, right? I mean, I was when I had my first 4 deals, I was like talking to everybody and anybody, and I think, okay, this is what we have, and they're like, no, that's not me. Finally, figured out, the people who are attracted to my deals, especially, are tech executives like me that have collected a decent paycheck. They have a decent amount of wealth. They want to diversify. They're paying a lot of taxes, and they're pained about that. So they want to learn about how real estate can help them with taxes, how real estate can help them diversify. A lot of them have invested completely in stock market, which is we have done that in the past, and I've lost a lot of money in stock, and that's why I don't go back to stocks anymore. And I'm trying to teach the same thing that through my platform of education.
Yeah, surprisingly, not many people knows about real estate. I mean, I know probably all the listeners here, they would have. I mean, you're already learning and listening to podcasts about real estate. Right? You already know, but it's very, very surprising to know how many people doesn't know about real estate and doesn't know about passive investing. Right? I mean, people know that you can go buy a house and give it for rental, but nobody knows that I can put a money with a sponsor who will do the work and you get a return, right? And
they know real estate investing, they don't know real estate passive investing.
Correct.
Yeah.
And so people think that they can buy a house.
My passion has become like passive investors has become my passion to educate them.
Yeah. I mean, that's what I wrote my book too, because I realized, not to introduce real estate to passive investor. I want them to be a bit more smarter, right? I mean, sometimes when they got introduced to real estate, they think, wow, my God, this is the best thing. They just follow one way of thinking, right? So
you just stole my line. That's what I say, because at Smart Capital, we make you smarter.
Oh, good. Because first is you get introduced to passive investing. Right. Second is how you become smarter. So let's talk about that. I mean, you said you have done some really cool stuff for passive investors and incorporating some technologies and all that. Let's go through that. What have you done and how does it add?
So absolutely. I mean, again, nothing was planned. It just happened over time. I mean, my first deal, when I presented to some of my friends, they said, take my $50,000. I said, no, I'm not going to take your $50,000. You need to sit down with me, understand what it is.
Well, that's the problem with me. I don't like just taking money. I want you to understand the deal because I believe it's a good deal, right?
The 4 friends that I had, I bought them tandoori chicken. I said, come sit with me and I'll explain to you what it means. So I bought wine and food. I said, look, I'm going to tell you what it is. If you understand it and if you still want to invest, that's great. But I want you to understand it because I can take your money and invest it. I mean, that's not a problem. That's the easiest thing for me. But I really want you to get smarter in my sense. That's why it's Smart Capital. And so that small group grew into a little bigger group. And I then created a meetup in Boston area on just apartment investing and, teaching what it is. And slowly. And I kept it small for a number of, my first year. I did it in my, office, conference room. There were like 35 chairs and whoever can come. But we kept it very educational. That was the thing. We'll take a topic, we'll discuss the topic. We want to make sure that anybody in the room is understanding. And if there is somebody else experienced in the room, they're absolutely allowed to speak up and do. So kept it very educational, very different meetup. So a lot of people said, okay, Raj's meetup is educational, so we're going to go there. And then I ran out of space, so I took a bigger space. Now, the membership in that whole meetup has grown to 600 plus people, but we now get about 70 to 100 people with every meetup monthly, and I've kept it monthly. And still, we talk about educational purposes. There's no come have beer, network and go back. That's not it. So to answer your point, in doing so, right, I mean, I've internally built some systems, right, to make sure, this is a smoother process for me. So on terms of the thought leadership platform, I have my meetup. I started doing blogs consistently. Obviously, I'm active on Facebook, LinkedIn, and wherever else I can post my blogs. I also become a member of the Forbes Real Estate Council, so I can, do some technology-related articles there and talk about what I'm thinking. So yeah, I've done all these things, and now I have, in a way that I've created this CRMs and systems, and attracting investors through whatever platforms that they can get onto podcasts like this and talk more about what I have done in my past and just share my experiences. That's basically it.
So how do you decide on doing a deal? I mean, let's say someone bring you a deal, right? How do you decide this is a good deal? I'm really like it. Well, what are the things that you look for?
So first thing I do deals with only very few people. I mean, as partners, right? I mean, I'm not into, numbers of deals. I don't count number of doors. I don't do that. Mm-hmm. I like to enjoy myself. Too old in my life to, be just chasing money and not.
You want to be peaceful too, right? Investing in the right sponsor, right? Because you can invest with any
right
Tom, Dick, and Harry out there.
People that I enjoy, right? I mean, the deals will have good and bad times, right? one of our deals is, we haven't done distribution, but I will say that I'll invest with that deal again. I believe so much in the team that, even because I'm so close to the deal, and, my investor was saying, hey, Raj, we haven't distributed what I said, it'll be fine. It's just because I trust in the people that I work with, right? And I could, do another deal with them. So I'm very selective about who I work with. People that I kind of, these are people from my coaching background. So I hear them strength, and they have to be complementary to my strength, right? So if I'm good at, finding markets, and I say, what, I'm going to invest in Orlando or Kansas City or whatever markets that I have in my head, because I've done some research on data on that. And obviously the underwriting should make sense. But my number one criteria is, the people that I work with, and do I add value to them and they add value to me. So I will claim I'm not a good asset manager, right? I will never intend it to be, right? So I will always look for a very strong asset manager on the team.
So you basically look for the sponsorship team and how the team, how complement with you as well, I guess, right?
And then the deal should make sense, right? I mean, the deal should, and the number should make sense. But that's true for everybody. You will not invest or partner in or be participating in a deal that doesn't make sense.
Yeah. What do you look for in a very strong sponsorship team that you really like? I mean, is it personality, integrity, or
integrity? I think number one is integrity, right? I mean, and track record is okay, but I think track record, I've seen these guys done. I mean, they've not done like 15, 20 syndications. Some of them have, but some of them are still early in the stage. They've done maybe two syndications before this one. But I've seen them through, the coaching classes and going through with them through, on due diligence trips. So I always go and make sure that I'm on part of, once we go sign up, form a structure, I'm going to get involved with all the due diligence and everything. So I sit down with them and see what their work ethic is, how passionate they are about it, and will they stay committed with me.
What about on other things in terms of the underwriting or in terms of market analysis? Have you incorporated any technology things into, analyzing that?
Yeah, I mean, I do my own technology things. I mean, I haven't written a software for that, but I do look at a lot of data.
What kind of data do you look for?
So, I mean, standard features like population growth, job growth, income, median income. We also look at STEM jobs, right? I mean, I look at if it's a technology-oriented jobs are there or not, because, I mean, in these COVID times, right? And the properties that are doing well are technology companies, people who can work from home, right? So all that is important as well to jobs in finding out what way to invest.
Very interesting. So is there any proud moment in throughout this real estate career that you think, I did that and I feel really proud about it? You can never forget about it until the end.
Well, a proud moment was, to partner with, on my first deal. I mean, that was a very proud moment. I told you, right, when the first time I looked at a syndication, when a friend of mine presented to me, he was on the GP side, I was on the limited partner side. He says, Raj, I got, the deal. And I said, what is this? This is like 300 units. I mean, there's too many zeros. There's no freaking way. So now when I did my first deal with that number of zeros, I mean, it was not 300, but 152 units. That deal was, that was a very proud moment for me, having gone through, understanding what it means. And then the other proud moment was to convince, some of my investors to partner alongside with me, right? Now that I've learned this and I'm sort of sharing my education, I don't even call it capital raising. I'm, giving them an opportunity to participate with us, right? Yes. So I'm doing them a favor, or sometimes I feel that way. And that's one way to look at it. And I'm saying, every deal of mine for my side has the same investor. First investor is always the same. That's me. So I'm going to invest in this deal. I've done the research. I've been to the property. Now I'm presenting to you this deal, why I like it. And you're welcome to, join along and, come for the ride. So the proud moment was to get over that achievement, right? The first one. And the second one becomes easy. And then the first one was the proud moment.
Got it. Awesome. Can you tell our audience how to get hold of you?
Absolutely. I mean, I have a website that I'm very active on Facebook, but my website is smartcapitalmgmt.com. My email is raj@smartcapitalmgmt.com. Easy ways to get to me. Our LinkedIn, Facebook also is there.
Awesome. Thanks, Raj, for coming. It's so refreshing to see how someone from the tech industry has moved directly into a multifamily investor. I think a lot of people do, right? But there's still got tons of people who doesn't, right? So It's just the thought process and sometimes the desire to technologize everything is sometimes hard, right? Real estate is...
And, you don't want to do that. I mean, you want to enjoy what you're doing, right? And if you're building technology companies, your passion, then real estate will not be the thing. But leveraging technology to get smarter, is another issue. So that's where
Got it. Awesome. Well, thanks for coming. I'm sure everybody got tons of value.
Thank you, James, and thanks for having me.
That's it for this episode. If you'd like to learn even more, check out James's free audiobook. It's the audio version of his best-selling book on passive investing. You can get the audiobook completely free, along with other valuable resources, by visiting www.achieveinvestmentgroup.com/free audiobook. Also, be sure to join our Facebook group too. To find it, just do a Facebook search for Multifamily Investors Group. Thanks for listening. Join us again for another episode next week. See you then.